Good morning, traders. Welcome back to my channel, Smart Index Edge. Have you ever noticed how price behaves like a magnet around pivot lines? In today's video, I'm going to show you how price approaching the pivot line can become a powerful opportunity, not by luck, but with logic. We will decode how pivots act as equilibrium points, how to identify genuine reversals from these zones, and how to combine this with confirmation tools for high confidence trades. Stay with me till the end. This might just change the way you look at your charts forever. So this is the concept. Price approximating the pivot line is a buying opportunity concept. So with my indicator, rolling pivot, dynamic rolling pivot, and Gann HiLo trend combo, and also another indicator CPR with the Gann HiLo shorter period and volatility contraction. Combined with that, how you can configure the buying opportunity. That is the concept I'm going to present to you in this video. So if you want the indicator, those who have accessed the first indicator, rolling pivot reversal magic, they can access another indicator, which is CPR with the Gann HiLo VCP indicator, which will enhance your trading setup. You can message me on 98452096000. The indicator price, this is for educational purpose only. This video is made for educational purpose only. The indicator, what you access, is made for educational and learning purpose, and you can get access and learn the things, how the pivot lines will get an opportunity. Combination of these two indicators will get an opportunity for you to make profitable trades. This is the concept actually when price is plummeting down to a buy zone, that is pivot line. Why price approaching pivot line matters? Pivot lines represents market equilibrium zones. My dynamic rolling pivot, it will give you dynamic equilibrium zones on an intraday basis, on the daily basis, on the weekly basis, on the monthly basis. When price, you might have noticed, price pops up away from the pivot line in the opening bell itself on an intraday basis, and then it moves towards the pivot. You need to buy then only, you have to enter then only. Price has to pop up above the pivot and price has to come, descend down and move towards the pivot. It signals the balance between buyers and sellers. Acts similar to a moving average test, a retracement to a value zone. Don't do that mistake. That's why in my indicator I've given big bar alert. And I've used analogy of the bus gimmick in my previous video. Just remember that. Don't enter when it pops away from the pivot line. That it means it has gone away from the pivot line. It is showing that it is moving away from the bus stand, but it will stay in the bus stand to pick up the passengers. The passengers are we people, retailer traders, waiting for the discount. You need to wait for the discount. That is the thing. Acting as a similar to moving average stressed, a retracement to value zone. Often a healthy pullback in a trending market. Remember this. Often a healthy pullback in a trending market. Trend should be up. Then reversing and approaching that pivot line is a very good. That is the thing, it matters. Here, buyers and sellers, and this is the pivot line, balance line. So price has to, when it moves away, it has to balance itself. That is the basic thing in life, and also basic thing in your trading also. When things go out of balance in your line, it has to balance out. Suppose if you lose someone, it takes time to balance out. Your mind takes to time balance out. If you are in an emotional trauma, it takes time. So time is the healing factor. Like that, time is the balancing time for the price. When the price moves away, you might have seen from your stocks screener, the immediately you will get stocks with the 3%, 4% up move. But you need to see where is the balance line pivot, and it has to balance it. For that, to solve that problem, I have developed two indicators. One is rolling pivot reversal magic. With you know that many people have accessed it and making profits. Another indicator which is enhancing this. So when the price pops up and when it retraces back to pivot line, it is a secondary trend. The primary trend is up and the secondary trend. It will be a secondary trend. There in the secondary trend, for you people, it comes very difficult. So even if you use Fibonacci retracements, 0.5 retracement or 0.38, sometimes it halts at 0.38 Fibonacci retracement, it starts moving up. Then it becomes difficult for you. To the deciding factor. For that, to eliminate that dilemma, I've introduced another indicator with CPR and shorter period Gann HiLo. Shorter period means for the trend identification when it is reversing to the pivot line. So it will solve all of your problem and you will get a proper entry. That is my intention to do another indicator to enhance that rolling pivot reversal magic. Bullish setup. What is the bullish setup is price approaches pivot from above. Price above the pivot, first thing, that is bullish bias. Price pullbacks to pivot, the possible re-entry zone, always you should wait for this. Price pulling back to the pivot is the possible entry zone. Rolling pivot and Gann HiLo bullish. The third thing is rolling pivot and Gann HiLo bullish, structure intact. CPR narrow or below, potential energy buildup. I'm not using RSI, just have taken this example. Interpretation is smart money re-entry near pivot. That is where you need to re-enter along with the big players. Big players move the bus, but they will make the gimmick. Because bus will be empty. He will be moving the bus without passengers. The bus has to get filled. So it has to balance out. Right. This is the thing. Just in this image, I'm telling price is moving and this is the pivot runaway. You should have this pivot runaway along with the price. Then only, and the trend. Then only the price will zoom up. In this example, this is a perfect setup. Yesterday's trade, I am going to explain it to you how you could have taken the trade. This first indicator is rolling pivot. All of you know about rolling pivot, reversal combo magic. This is the Gann HiLo. This dotted blue line is, big dotted blue line is Gann HiLo, and this yellow line is pivot. And see, in the opening bell, the price popped up for how many minutes? 5, 10, 15, 20 minutes. After 20 minutes, I am not going to take the trade. I'm seeing that price is above the pivot and price is above the Gann HiLo. I am waiting. See, this is the bus driven by the big player without passengers. Because it is so fast, it is moving so fast. I am not seeking an entry over here. I will wait for the bus to make halt and passengers to board in. There comes my another indicator with CPR. These three lines, three dotted lines, blue, black and yellow, that is CPR. That is central pivot range, dynamically plotted. In my indicator, it plots dynamic. So when the price comes to the hitting the CPR, and you can see in that combination, CPR with another shorter period Gann HiLo. This is the longer period Gann HiLo. The step line is the shorter period Gann HiLo, confirming the re-entry. Confirming the re-entry, I am going to seek an entry over here. I am entering at the right time when the bus is going to take off, leave the bus stand, and I am going to enter in the right time when everything, both the shorter Gann HiLo trend and the longer Gann HiLo trend, they are matching. This will be a secondary trend. This is the primary trend. Primary trend is up and the secondary trend is down. And in the secondary trend, when it is within the above the major trend, and also it is hitting the CPR and it is taking off, I am riding the trend. This is where you need to enter. For that, I have made another indicator. Two combination of these two indicators will give you super edge for your trade. Here, everything is aligning. So, for the bearish setup, if there is a bearish setup, price approaches pivot from below. Price below pivot, bearish bias, the trend is bearish. Price move up toward the pivot, that is the resistance zone. Rolling pivot and Gann HiLo bearish, continuation down likely. You have to understand this. Don't do mistake. Interpretation is opportunity to sell on rejection from pivot resistance. This is an opportunity to sell on rejection from pivot resistance. This is a bear. When the price pops up to the pivot, this is the ceiling. This is sell on rise. This is a bearish approach. The price becoming expensive to sell at a very good price so that a seller will get a premium to capture it. In this example, I have taken the put option, yesterday's put option, 25,300 put option. You can see that price piercing through the CPR and the trend, major trend is that Gann HiLo is bearish and the secondary trend, it became bullish. This is where the people do mistake. They will enter into the put option, get trapped, and the pivot is bearish. So price approaching the bearish pivot is a selling opportunity and the trend continued down. You can see this. This is the concept. See, now I think you have understood when to take a proper entry, when to take a proper, you should not make mistake. That is the thing what I am introducing with the two sets of indicator. One indicator for the primary trend, another indicator for the secondary trend, and all these two together confluencing will get a trading edge for you people. It is a complete setup. Even for swing trade, even for your positional trade, even for intraday trade, commodity trade, and currency trade and Bitcoin trade. Confirmation factors for a good pivot buy. Price rejection candle. You should observe for the candle also. What is the behavior of that candle, whether it is an hammer or engulfing near pivot. I am not using volume spike or strong bounce candle or RSI or TWAP, but it is an example. You can also see for that. You can apply on volume and you can see for that. And when pivot not broken decisively to the downside. When all align, pivot acts as springboard for continuation. When everything align, pivot acts as springboard for continuation. I am repeating the sentence again and again so that you will remember it. So, this is an example, evidence for a good trade. What should be an evidence? The volume, RSI, pivot line. You have to look it with your magnified lens for a good trade. All should get, you should get the confluence of everything. My indicator, these two indicators makes the simple, the complicated concept of market structure into a simple thing. It will be like a teacher for you, guide through your journey, trading journey. You can utilize these two indicators for a learning process and you can learn better, trade better. So, here in this analogy, moving average versus pivot line. Moving average is the dynamic mean of price. That's why many traders, they will use the moving average. You might have heard many people, even on the TV, or price is above the 50 period moving average, price is above the 100 period average, price has fallen below the 200 period moving average, to say that it is becoming bearish like that. So moving average is the dynamic mean of price, and pivot line, dynamic equilibrium based on the previous session balance. Pivot line is dynamic equilibrium based on previous session balance. Both attract price during retracement, act as launch points when trend holds. Both attract price during retracements, act as launch points when trend holds. So you need Mr. Moving Average, Mrs. Pivot Line, and the price. Price launching above that. All this combination you need for that. In this example, Apollo Hospital Enterprises Limited, I'm just taking the example of the Apollo Hospital. Oh, you can see over here, the price was going flat. 1, 2, 3, 4. It was balancing here. On 14th, it launched. See, it took take off from this area. Pivot, CPR, and the price bouncing off this launch pad and retracing back to the median pivot line, and CPR is acting as support, and my short-term period Gann HiLo confirming the prime secondary trend reversal, and both secondary trend and primary trend are in sync, and the pivot price is moving up. This is how. See, I was observing this Apollo Hospital since 4 days because it was bullish. Because why? In this consolidation phase, you notice yellow line is the pivot. Pivot was rising and balancing. Even though it popped up above from the pivot line, it has not lost its trend. Primary trend has not broken. Only in this area, this is to trap the people. It came down and bounced off. Bouncing above the price, landing to 180 degree, and where the CPR support is there, and price moved up. I was watching the 7,700 call option for the Apollo Hospital. In this balancing period, the low made was 104 rupees. From the 104 rupees, it within 1 day, 2 days, it has now the price is at 179 rupees. Within 2 days, friends. For this stock to buy it is so expensive, you could have made, if you would have observed this with the help of my two indicators, you could have gained access to this option, and you could have generated money in this. So, quick recap of this reference table. You need to have this reference table, price above the pivot. First condition, price has to be above the pivot. Then it has to pull back to the pivot and then bounce, and that is the buy. Price below the pivot, that is the bearish setup, pull back to the pivot, rejection, that is the sell. Always you need to wait for the sell setup when it pullbacks to the pivot. The price has to become premium. Whereas in the buy setup, the price when it pops above the pivot and it has to become discounted, then only it will become a buy setup. Price crossing pivot repeatedly, price is whipsawing the pivot, that is indecision. Do avoid this. Pivot is equal to market anchor zone. Wait for reaction before entering. This is the reference table you need to write down. You should memorize. Then your trade, you are not going to do any mistake. It has to become your muscle memory. This reference table has to become your memory. So, as a teacher, I am explaining to you buy is equal to bounce, sell is equal to rejection, avoid is neutral zone. Rejection, confusion. So you should avoid confusion. You should buy at the bounce, sell at the rejection. This is up. With the reference table, you should remember this graphic image. Using with rolling pivot and Gann HiLo, this is the pro tip I'm giving. Many of you might have accessed my indicator and becoming profitable and learning more things. That is the feedback what I'm getting from the people who have bought my indicator. When price approximates pivot and rolling pivot flattens, not flipped, it is an ideal buy re-entry. When both pivot and Gann HiLo flip bullish together, trend confirmation breakout. Combined with CPR, another indicator which I've created for volatility confirmation for high probability trades. So these two indicators, they complement and give you support, strength for your trading journey. So the power of trio, perfect entry confirmed, pivot, Gann HiLo, CPR, they will give you perfect entry for your trade. When they all combine together, so the price will zoom, rocket, you can see. Okay, friends, let me close. If you want my indicator, message me on WhatsApp number. This is my WhatsApp number. And this is a disclaimer. This is for educational purpose only. Thank you very much. Nalinakshi Swami signing off.